Today we want to talk about RMDs, required minimum distribution. When you look at your 401k, when you look at your IRA account, you see the value of it and you say, I've done good, I've put that money away, that's my money. Well, sadly, that's not quite the case, because when you start withdrawing money from your retirement accounts, you get a partner that you weren't expecting. The government, the IRS. You have to take required minimum distributions from your retirement account. And because that is the case, that is money that the government is going to take and you're going to pay tax on. For 25, 35, 40 years, you put money away in your retirement accounts. You've had the advantage of tax deferral. You've put money in pre-tax. Now the government looks at you and says, you're going to withdraw money from those accounts. Now is the time that I get paid. And one of the biggest misconceptions people have is, when I retire, I'm going to be in a lower tax bracket. Well, sadly, if you've done a good job in building up your retirement accounts, you may not be in a lower tax bracket. And the taxes that you pay on your required minimum distributions could be higher and put you in a higher tax bracket as well. So be prepared for that. But there's some IRA, RMA mistakes that we want to talk about as well too, because I think those are important. The first one we're going to talk about is not taking your RMD on time. When you turn 70, you have, at age 70, at 70 and a half, you must start taking RMDs. That first year is 3.65%. And every year thereafter, that number or that percentage of withdrawal goes up. And if you miss a payment, if you don't take those RMDs, you're going to get penalized by the government for up to 50% of the value of that RMD account. So avoid making that mistake. That's the first one. The second one is calculating the RMDs, but calculating it wrong. You use the formula that they will give you, but many financial institutions will do the calculations for you. I urge you, whether it's an insurance company, a brokerage firm, or a mutual fund company, let them do it, because when they put it in writing to you, this is your required minimum distribution for the year, they're putting their necks on the lines, they're putting the number down, and they're responsible for the accuracy. Let them take the risk, use those numbers, but make sure whatever number you have, it's the right number for your RMD each year. And remember, each year, the number or the percentage of your withdrawal goes up. Please be aware of that. We have a great table that actually goes up to age 115. So if you don't have the table, we'll be happy to give it to you as well too. Another one which we've seen is calculating your RMDs, combining both your and your spouse's retirement accounts. Please remember, the word IRA means individual. That means your retirement account and your spouse's retirement account. They are individual. They have to be calculated separately. And if you're different ages, it could really throw you off. So make sure when you take RMDs for both you and your spouse, you look at your ages. You don't combine them. You take them individually. Very, very important. The fourth mistake is taking the RMDs from the wrong account. A lot of people think, well, the government's just going to take my money. They're going to be happy getting it. Doesn't matter where it comes from. If you have 5 IRA accounts, that's correct. All they want is the total of the value of your IRA accounts, and then the percentage can come from any of those accounts or all of the accounts. The government wants to make sure they receive the correct amount of money, so please make sure you calculate that correctly too. And finally, the biggest mistake we see is people forget to take their RMDs. And that's a complete no-no, because the IRS does not forgive you at all. If you have, let's say, an RMD that might cost you $4,000, they would double that to actually fit up 50% would be the penalty. You would wind up owing $6,000, $2,000 penalty plus the $4,000 you had to take out. You don't want to be put in a position like that. So be very careful. Talk to us if you have questions. We'd love to explain to you how these RMDs work. Required minimum distribution means you're required to take the money. Don't forget about it. Thank you.
All of us at Secure Retirement Strategies sincerely hope that you have found this podcast informative. If you have any questions, don't hesitate to give us a call at 866-481-5788. 5211. You can also visit us on the web at srsstrategies.com. Be sure to like and subscribe to our podcast on YouTube, and you can also find this podcast in audio-only format on iTunes. Thanks.